Hey, what's up guys? It's Ezekiel Chiu here. So, most traders, they clutter their charts with like so many indicators that they can barely see the price itself. And then you wonder, like, why are they struggling to make sense of the market, right? So today we are going to go to fundamentals. This is the real stuff that works, price action. And I'm going to share with you 5 golden price action strategies that you can apply in any markets. There is no more unnecessary indicators that you'll be using. There is no second guessing, like, is this the right move or not? Should I enter this or not? It's going to be clean, pure price action strategies that you can use it to trade the market like a pro. So you're going to be learning when to sell when people are buying, and how to get in the market before others are even thinking about it. So much more. You're gonna like this one. Yeah? Let's go. Alright, so first off, what is price action? Price action is not about predicting the market, okay? It is understanding what is happening right now, right? There is no lagging indicators, there is no waiting for signals, there is no second guessing. It's raw, real-time movement that tells you exactly where the buyers and sellers are fighting. It's just a battle of buyers and sellers, nothing more, nothing less. Right, so price action is your way of reading the battle in real time. So to see exactly who is in control and then what is about to happen next. Think about it like this. If price, they kind of hesitate at a level. So that means what? That means the buyers and the sellers, they are like wrestling for control. And then if price breaks fast, breaks clean, it means what? It means the momentum is strong, and then one side is winning. On the other hand, what if price fakes a breakout and then reverses? It's a trap and somebody just got played. Okay, so learn to read this. You'll be way ahead of 90% of the traders out there. Because why? Most of them, they are what? They're waiting for, the RSI crossover, the MACD signal. That's already too late. Trading success is not about memorizing patterns. It's about seeing what's happening right now before everyone else. Price action, this is your unfair advantage. Indicators like moving average, the MACD, the RSI, they're lagging. So by the time they tell you to act, the move has already happened and you are late to the party. So that's why price action is king. It lets you read the market in real time, right? Without waiting for all these delayed signals. Instead of reacting, you are now anticipating where price is about to hit next. Okay, but here's the thing. I'm not saying that,
okay, Ezekiel says, let's stop using indicators anymore.
No. Indicators have their place, and I use them as well. But if you want precision, if you want to catch moves at the right moment, instead of like,
let's chase after them,
right? You need to master price action. That is the real edge in trading, right? So I'm going to share with you the 5 powerful price action trading strategies that you can use for all the vehicles in the market, whether you're trading, say, Forex, stocks, crypto, commodities. I trade them all and I use it on them all as well. You ready? Most traders, they focus mainly on the what? The wicks of a candle. But the body of the candle can tell you just as much of the whole story. Some traders, they overcomplicate candlesticks. But here's the thing, right? Here's the truth itself. Let's look at this candle, right? What is it? It's a big green candle with no wick. So that means what? That means the buyers are in control. So when this candle forms, it means what? The buyers saw that this price as a great opportunity, they began buy a lot. So the buying pressure is so high that price starts going up. So then what? The selling pressure is so weak that the sellers at a point, they cannot overcome or overpower the buyers, right? So that's why this candle has such a strong close, right? So when you see a green candle like this, it means what? It's a strong sign that the market is going up, right? So what? It is also a great indicator of support or resistance level. So one of the key lessons in trading is that the past can help you to predict the future. This is what we always do, because that is like a good sign. Like what happened in the past could be a good sign to help you predict the future. So that's exactly what we are seeing here. We have this green candle, big full candle with a large body, no wicks, right? So what? We set a support level here because why? Price and the buyers, they tend to favor this level and this price itself. Okay, so here's what happens. We identify the support level after seeing this big full green candle with no wicks, right? So then what happens? Price moves sideways for a while and then it comes back to the level itself. So once it hits the level, what happens? The buyers jump in because they like the price, and then from there price takes off, right? So price action doesn't lie in the aspect. This creates a base fundamental level. This is just the beginning of price action itself. You got to take note. One single big bar can take down the entire downtrend, and then one single bar itself, because it's so strong, it can also create itself a support level. Mean reversion means that price is like a what? Like a rubber band, right? You stretch it so far, it snaps back. So let's break this down, right? So you look at this price action. If you just look at it, it's like a mess of candles moving up, moving down. Here's the thing. The moment once we put in a 50 moving average, everything changes. Suddenly, what's happening here? You see structure. You see a clear direction instead of like random movements in the market. Now you can see the trend. The trend is not hiding. The trend is always there. You just need what? You need the right tools to review it. Right? So you see earlier when I said that, hey, it's not that, hey, Ezekiel, so you don't use indicators. No. Indicators have their part to play. But I'm not purely using indicators to trade. Price action is still the key. Okay? So here's the thing. Let's continue. When price drops significantly below this 50 moving average, what happens? It ends up returning back to the average itself. So the same thing happens when price goes too high. As you can see over here, price rises too much several times, right? So what? It pulls back to the average itself. So here's the thing. It's like a magnet. Price always wants to come back to the mean reversion area. Once it stretches too far away, whether is it shooting up or shooting down, when it stretches and stretches and stretches, it's like a rubber band. Keep pulling and pulling and pulling. What's going to happen? Eventually, it's going to go back up. At some point, it's going to go back up. Therefore, if price drops way below the moving average, don't panic. I got to sell now. I got to sell now. No. Be patient. Watch for the rebound. That's where the smart traders would step in. This becomes a good time to buy because what? Price tend to revert and go back up to the average price itself, which is the 50-day moving average in this case, right? So price will probably move back towards the average. A lot of times it does. Does it happen 100%? No, nothing is 100%, but a lot of time it does. So what? This becomes what? This also becomes a buying opportunity, isn't it? Price move backwards towards the average. Smart traders, they don't chase price. Price keep dropping. No. Price keep dropping. I gotta sell. No. Hold your fire, right? We wait for price to snap back. We find buying opportunities. It snap back, we find selling opportunities. And that's where we plan our trades accordingly. You're kind of seeing it? A lot of traders get killed by false break. A false breakout is a trap, and smart traders, they know how to avoid it. Let me give you an example of what a false breakout would look like. The market is going sideways, right? It's building up the pressure. When price finally breaks above the resistance, what happens? Traders are all going to jump in. It's a breakout! It's a breakout! The market goes up, and then boom, it reverses. That's a false break. This false break, it lures all the breakout traders and only to slam them back into that range itself. Why is it a false break? I mean, you have seen prices, right? Where price breaks the high and only to crash down after which, right? And that's where most traders lose their money, right? The breakout traders, they get trapped. They enter the trade thinking that it's a real breakout. They enter probably later a little bit more. And then the moment once they enter, boom, they get wiped out. So for breakout traders, here's the thing. When their stop losses are hit, it's like what? It's like them placing a sell order, which adds more selling pressure and then to push the price lower, right? So that is the core concept behind this forced breakout technique. Let me give you some examples, right? Price fix a breakout, it lures the buyers in, right? And then after that, it goes back down into the range itself. This is a classic forced breakout trap, right? So those who bought the breakout there, painful. If you think yourself as the trader who bought the breakout there, right? You bought at a high, you have stop loss, right? So where are your stop losses? Right below the breakout itself, right? This is also where the smart money comes in, right? So what's going to happen? What's going to happen is that, so these are the areas, right? Once price falls, it's going to hit the stop loss, right? And then after which all these stop losses will be activated, loss triggered, right? Stop loss triggered means what? Selling pressure, right? So that is the core reason why forced breakout have such big moves downwards. Here's another example, right? Not only it force break with closes, right? There is also what? Spikes up before coming down. Some people like this could be the higher time frame, right? But in the lower time frame, there are actually closes, right? The bar actually closes above. So depending on people whether they place pending order, in this case, if it's a pending order because of a wick, it got triggered. To a lower time frame, there's probably a bar or so that closes, they got triggered, right? The buy trade got triggered before boom, reversing downwards itself. Another example, right? So what? Here's the low, right? Now this is on the other side. It breaks through this important low. It traps, when it breaks through what? All people who wanted to short, who wanted to sell at there, this is the strong level, and then it is broken through. It's the perfect breakout trade. But instead of continuing the free falling, the market goes back. The bulls, the buyers, they step back in, they gain back control of the market, and price starts to go up higher. Same thing. This is a classic force break. It shakes off all those weak hands, right? All those people who are weak, right? And all the stop loss placement that gathers the momentum for the market to go up higher and higher. Here's the pro tip for you. I mean, this is an important takeaway, right? That you can make money right away. The harder the price moves, the bigger the trap. When you're so sure that this is going to be the most powerful breakout trade, that means what? Not just you, a lot of traders are also looking into this. There's not just buying orders, there's also a lot of stop loss orders. Once there is a breakdown, once the selling momentum kicks in, all these buy orders is going to get wiped out to create all these stop loss orders. That's why I'm not saying those breakout won't work out. You can see those breakout working out as well. But when those breakout becomes forced break, you're going to see all this big move that reverses down. Big time. Boom, 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 boom. I'm sure you've seen that before. That means it's this breakout trade is not just an important area for you to buy. It also becomes a very powerful reversal area for you to sell to make big profit. Is this tip good? Most traders, they chase breakout after a big move. After a big one, they were boom, once the breakdown, I'm going to go right in, I'm going to chase it. It's going to break out right now, I better get in now because the market is shooting up, I better get in. Oh, you're fired. Instead of doing that, chasing it, the market is going to break out now, no time to calculate this and that, no time to analyze this and that, get right in. And the moment once they get right in, they get stopped out. So instead of doing that, as a trader, you're always cool, always calm. So what are you going to do? Here's one way. Look for the build up, right? So when price, what happens? It grinds to a level of this high consolidation. It's this consolidation is not random, you know. This area is so powerful. This area is what is building up momentum. It's like the stronger it builds, the more it builds, what happens? The more powerful it's going to be. Right? So next time when you see, oh, it breaks out, I want to go back in, I want to go right in. No, hold your fire. You don't have to do this kind of thing in trading, because if you're going to jump at all this in a way so-called FOMO, right? Fear of missing out, right? Wait for this controlled tight range. I'm not saying those wouldn't work. A lot of times, some of them will work. But as traders, you're always cool, calm, collected, right? So you can wait for this controlled tight range near the key levels. This is where the best breakout happens. When you see a tight consolidation, that's where you want to buy. Because why? It gives you a fantastic place to set your stop loss, right? You can position it where? Just below the low of this build up. So because you're not placing your stop loss way below, you're just placing it below this low of this build up, your risk to reward ratio, if this trade works out, is going to be insanely good. The build up at that point is low volatility, but it's also gathering momentum for the breakout. Once it breaks, price is likely going to surge, and that's where you can ride the momentum instead of you chasing after it. Alright, so as what we talked about, it's not about predicting the move, it's about you waiting to stack all these odds in your favor when the market gets ready to explode. Alright, so now here's an example, right? The market don't just go up or go down. What happens? They build pressure, right, before they explode. So all this period, sometimes, the market is not doing anything. Oh, it's not that the market is not doing anything. The market is, so calm right now. It's so boring. The market is what? Is loading up. At least all this movement, they are loading up for the next big move. Remember, we don't chase after the trade, right? We spot this first. We spot all these areas first, and then we position ourselves before the breakout happens. You see what's happening over here? Price is making what? Higher lows. They are squeezing into the resistance area. The candles are tightening up. It's not random. All these big moves, they start with small moves, right? And then the volatility, they expand and contract. And then boom, it breaks. Okay, so here's the play. You wait for the tight build up. The smaller the range, the bigger the breakout potential, right? And then entering after the build up, right? That's where you get a clean entry, right? You get a fantastic tight stop loss for a fantastic big RR. Let me give you another pro tip. You can add the 20 period moving average when the market starts building up, when the market starts tightening up. If price keeps bouncing off this 20 period moving average during the consolidation, this is your signal. When the 20 period moving average it aligns with the low of this build up, it's not random, it's the market showing you price is respecting the level. The buyers are stepping in, right? When the price holds, the momentum builds. That's where boom, when it goes right, you strike. Not after it goes up, but right when it takes off. Here's another example. Price is building up, right? Tightening like a spring, like a spring. Press and press and press and press and press, like press before. So what happens? In this case, it drops. A sharp drops follow. But here's what matters. The 20 period moving average is pressing down the highs of this build up. You see this is where we're adding it, right? So this is a clear sign that what? The sellers are now in control. Price is respecting this level before it drives it lower. Let me give you your final golden nugget for today. Alright, so instead of waiting for a breakout, you can look for setups before they happen. Here's the two things to watch for. Number one, the build up on the daily time frame. You already know the build up, right? So price should be what? Consolidating at the area. You switch to another time frame, you watch for a forced break on the lower time frame, which is the 4-hour time frame, the direct time frame below it, the 4-hour time frame, right? That's where a failed breakout that traps the traders who wanted to buy. If you catch this forced breakout at the resistance area, and chances are that the price is about to drop, you're gonna get an insane RR from this. Alright, so let's use the same examples before. Price is building up at this key level, right? So instead of just blindly jumping in, what we're gonna do? We drop it down to the 4-hour chart. Alright, so that's where we are playing multiple time frames. You spot for the forced break that traps the traders at the highs. So it gives you the perfect spot to enter before the official breakout below, if that happens. Right? So therefore, by aligning these two time frames, you're going to get in way earlier than everyone else, because everyone else is waiting for the breakout below. Well, waiting for the breakout below is good, it's going to work, right? But there could be retracement and such. But now if you get breakout at the top before the momentum drops down, that's where you're going to get an insane RR. You can see that there's a couple of false breaks at the high here, right? The final false break, they kind of trick everyone, right? It wipe out all the previous highs. So you cannot trick everyone, is it going up? No, before coming back down. So that's why we want to wait for confirmation instead of like chasing all these breakout, right? To give you the edge in the market. You might take a couple of hits, right? Before the real move. This is part of the game. If you shorted the first false break, you could have locked in some profits at the lows to secure your win. What? Keeping maybe a piece for the bigger drop. right? So that's also a way to play. You don't have to predict every move. You just got to position yourself, right? So what? Here's what could happen. You can take half of your profit at the first key level. All right, now I'm going more, right, to taking profit. You can take half of your profit because it's not confirmed, right? It's not confirmed that it's going to break out, right? You can take half of your profit at the first key level, and if price breaks lower, right, you are still in the game to catch the bigger move downwards because you still got another half of a position left. But if it reverses, it's fine. Why? Because you already locked in your gains. In the worst case scenario, the market goes back up, what happens? You exit at break even. So you're controlling your risk to become a smarter trader itself. Most traders, they chase the price and then they get hit, right? But for us, we're going to be a lot better, right? Because you watch this video. By using the multiple time frame, we are preparing for the move already. We anticipate that's going to happen. You see this false break at the highs, right? Like I said, it's not random, right? It's the market doing the fake out to take away all the weak traders before the real move downwards. So when we align it with the higher time frame, what happens? The higher time frame is what? The higher time frame is down, right? It's a downtrend. When this does, it becomes a high probability shorting. Because why? We are not just randomly trading, we are not trading in line with the higher time frame downtrend as well. All right, so you see all this positioning, right? Plus the build up, plus the false breakout. This is how you add them up. Here's an example. So you look at this chart, right? Price is stacking up, right? It's building pressure, building pressure, building pressure. It's getting a very strong tension. Here's where the most traders, they miss out. Instead of waiting for the obvious breakout, we drop to the lower time frame, for example, the 4-hour, right? That's where we spot early signs. Small shift, wicks rejecting the level before, it means what? Momentum coming in. At a point, it could be a pin bar, for example, or you go to doji at this level. That's where we get in before the breakout happens at the bottom. You get in here, it comes down there. Like I showed you the take profit method. You can get in, get up half, get up as it breaks below. This allows you to get in before the rest of the people get in at the breakout itself. Here's the thing. If the market does a breakout, a false breakout, don't get trapped in it. Should I get out, this and that, or whatsoever? No. We use it to our advantage. Should I get in? Should I get out? That kind of thing. No. If we want to go short, we watch for the false break at the resistance area where price push up higher. It gets in, it sucks in all the buyers, and then boom, come back down. This is your moment to go short, right? If you want to buy, on the other hand, you will spot a false break at the bottom, at the support level where price dips below, and then after which all the weak hands, they get stopped out. For example, it goes back up. That's where you get ready to buy. The smart traders, us, we wait for the trap to take effect. Right? Remember the momentum, once the stop loss order will keep coming in, that's where the momentum builds. This is why this method works so great itself. Right? When everybody is frantic, everybody is losing, this is where you're profiting big time because the move is really, really big. Price action is the king. LeBron James. No lagging indicators, right? Just reading the raw market, right? You read the raw market movement to see who is in control, and then you anticipate the move. You pre-plan. Then here are the 5 price action trading strategies that we have covered. Number 1, the big full candlestick, right? This itself is gold. A single bar, right, becoming the support and the resistance, right? So what? Most traders, they undermine the power of such candlesticks. But these candlesticks, they tell you a lot about not just the strength of the current market, but it also sets you up the important support and resistance level for the next couple of frames. Number 2, the mean reversion. So price what? It always wants to return to its average. Okay, so don't chase the move when the market keeps going up. I need to buy, that kind of thing. Don't chase the move when it's so far away from the actual value itself, right? Number 3, false break, right? Spot the trap when breakout traders, they get caught. Then you, as the smart trader, you trade the reversal. Method number 4, the build up strategy. So what? You look for the tight consolidation before the breakout for the best RR, the risk to reward ratio. Number 5, the pre-breakout method. Watch for false breakout in the lower time frame before the big moves. Good, 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 good. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.